do believe, based on what we're doing now though, based on that strength of this candle, this is going to become an inverted volume imbalance. So I'll show you what I'm going to do here. I'm going to sell one contract. Stop, we'll make 220. Yeah, we'll make 220, that's fine. So we're going to execute there for a sell position. We're going to look for price to trade lower, tap back into this inverse volume imbalance, then move lower. And this is how I trade the opening range. So the opening range is there. We've inverted that volume imbalance. I'm going to try and target some of these lows down here. They're relatively equal. So I'm going to set a buy limit for one contract down here, like this. And that's going to be here about 20 handles. So I'll do a buy limit there, which is fine. But whatever happens with that inverse, or whatever happens with the volume imbalance for me, that is what makes the difference. So if we invert it to the downside, then I'm going to look for a short. If we respect it, then I'll look for a long. There's plays for both, right? And I could be taking advantage here of the manipulation move. That could be the case. However, I'm happy to do that because manipulation should at least yield me about 20, 30 handles, and I could even hold a runner. So that'd be the plan here. And if we start rolling over again here, I'm going to pyramid into the position, which is fine. But I can see one contract is there. It ultimately comes down to that space. So yes, the new day opening gap is the closing price to the opening price. I understand that. But for me, I just like to use that actual volume imbalance that's created from that new day opening gap. For me, I treat it as a PD array. So if we respect it, great. If we don't, then I treat it as an inverse volume imbalance, which is quite nice. And we should be able to revolve around because I truly believe, based on the opening price there, what we did, more than likely we're going to move down first to move up. So I'm going to take advantage of manipulation, and if it extends further, it extends further. So that there's a plan. I like what we're doing. See how we're kind of, let me just move this across. See how we're just hovering? We're hovering in this, inverted space. I like that. So the market's opened. Here's the thing. The market's opened, come down, right? It's traded in this candle, right? Traded, and then closed right here, forming that gap. Next candle, like this. Next candle actually inverts it. Yes, we close back up like this, but based on the initial reaction, if we're going to move higher, we should have respected that. This is all immediate rebalancing, so I'm going to sell one more contract there because look what price is doing here. I'm just going to change my sell or my buy stop now. That's all immediate rebalancing. See that? So we should start to expand now. Look at all this with these wicks. So I've pyramided in there to the second contract. My stop, I'm going to make it about 10 handles like that. So I'm risking about $400 on this trade, which is fine. And probably what I'll do is I'm going to do this, right? So we're going to do a base hit kind of scenario. It's about 10.5, so we'll do this, right? We'll take one off. We'll take one off down here somewhere. Right, so I'll set a buy limit here. And then we'll hold a runner contract. So we'll remove the bottom buy limit there. And then we'll hold the runner. So the premise of this trade is using the volume imbalance for the new day opening gap. That's what I like to do for trade the opening range. Having the overall narrative that yes, we are going to move higher. I believe we are, right? But in order to move higher, we're probably going to move lower first. Yes, I'm taking advantage of manipulation, but there's enough manipulation to take advantage of that is still feasible. So I can do this and trade to here. And then over here, I can trade back up if I want to later on. So I've got the option to do both, and there's enough range to do both. So for me, I'm pretty happy to do that. But that's the framework. And also the other thing too, guys, is that we've actually swept this buy side and tapped into this FVG. So it's normal after sweeping external liquidity, tapping into an external fair value gap to reprice lower or to reprice in the opposite direction. So that's what we're doing here. And this is how simple it can be. You don't need a really tricky strategy. A lot of people might say, well, what about, this low resistance on the buy side? That'll become important for later. But ICT's talked about it. Many people talk about it. In order to move in one direction, the market will often move in the opposite first to manipulate people. But if you can capitalize on the manipulation, then go for it. realistically, you know, this sell side is the overall objective, but I will be going to break even once we take that first buy limit. And at this point, I can probably mitigate my risk further. So I'll show you guys that too. That's what I like to do. Just mitigate risk. So first entry comes on this candle. Not the best fill. Second entry comes up here after that immediate rebalancing on these candles there. And now we just let the price do its thing. So I'm going to do this video in segments, but I have been trading the opening range lately, especially when there is a nice gap, especially when there is a nice volume imbalance, because this allows you to use it as a PD array. When you have a weak opening, and here's the key, when you have a weak opening, then in my opinion, it's not worth trading the first half an hour. You may as well wait for a couple hours of price action and try to trade one of the later macros. And if price is very, iffy, then you can always come back later on and trade the midnight macro or one of the macros that exist much later on. So that's kind of the premise here. I don't believe this gap. I don't believe this bullish gap. I think that's just manipulation there. So this is what it's looking like. Stop's going to move above these green candles here now. I want to mitigate my risk even further. Just managing my stops. I'm not going to break even yet. I'm just going to set a buy limit to just for one contract, just in case we do spool very quickly. I'm going to set a buy limit down here. Buy limit just like that. I'll do it just below here like this. See if we can tag and push through that low. So you can trade whenever you want, really. You just need to have the right market structure elements to support your trade. And simply all I'm doing here is I'm using PD arrays, I'm using market structure, and I'm combining the two together to phrase a trade. And obviously using the concept of the power of three, because we need that to take this trade, or I need that to take this trade. Understanding that yes, the market is probably going to go up overall, but in order to go up, it's going to go down first. And if that going down movement has enough range or enough handles for me to take advantage of, I'm going to take it. So here in Australia, it's 8:10 in the morning, and Asian session or the market open is at 8 o'clock. Makes for a nice day. You can get this out of the way, get the trading done on one account, two accounts, whatever it is, and then move that forward. So again, if you want to trade the opening range, if you like to trade it, I would look for the volume imbalances. I would look for impulse at open. These are all important things that I need to have if I'm trading the opening range. Has to happen, right? Without impulse, there's no trade. And that's something that a lot of people can't be patient with, but without impulse, I'm no longer interested. I'll come back later on and trade either the Asian session if I'm free, the typical Asian session, 7 till 12, or I'll come back in London session, or I'll come back later on and I'll trade, potentially the last macro of London Open or whatever it might be. So keep that in mind. But you can see how we're doing this. I like that. Price is developing quite nicely. Going to let price do its thing here. And again, that first TP is roughly, 10 handles actually is here. So what we're going to do is this. We're going to account for commissions. We're going to do this. So 10 handles, modify that order. About to get tagged on that too, which is good. So going for roughly about 10 handles on the first contract, and typically is what I'll preach. And then from there we can revolve around. So in these situations when price is doing its thing, you just got to be patient. All right, there's the first TP. We're going to move now to break even. And the rest is a runner, guys. So the rest is the rest. But that's how I do it. So you can scalp the opening range. This is the second day of me trading it because we do have enough volume in the market. And in the past couple of weeks, I've noticed that this opening range has been quite nice. It has been quite, volatile. And because of that, we can capitalize on that movement. So that's what it's going to be. I'll come back with the final result. Overall, I'm happy with that. It'll be plus $200 on this account and we can move on. If we take the final TP, that's great. If not, it doesn't matter. You could take it all off here. It doesn't matter, right? But ultimately, the way I like to trade most of the time, not all the time, but most of the time, is to take money off if I'm in with 2 contracts and then leave a runner. If I'm in with 1 contract, then here's the thing. 1 contract being in with, I either take a quick hit or I'll try to hold that contract. So you'll see that in the video at the end of the week. I think it was yesterday or Monday's 450 to 510 macro. I try to hold the 1 contract to capitalize on the losses, to mitigate the losses, and I've managed to do that and come out in positives for the day because of that factor. But it's just one of those things. You play it by ear, see what the market wants to give you, and accept that right now I'm taking advantage of what's called the manipulation move. And the manipulation move doesn't have to be big. It can be, but it doesn't have to be. So again, hope you guys enjoy this video. I'll be back with an outcome in how the trade played out, and we'll talk very soon.